EduTrainer Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your EduTrainer National Insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your EduTrainer and coach for our EduTrainer workshops, our entry level into life insurance. And all this week we're talking about life insurance writers. And as I said earlier in our couple broadcasts yesterday and the day before, there are so many writers and definitions. And you have to go back to Monday's class. Don't come in here and watch Wednesday's class yet. You need to go back to Monday, our first episode on writers, because it really helps you understand what we're thinking here. And we'll do a little bit of review at the end, maybe Friday if we have time. Before we get going, again, remember all our classes, if you're coming into our class for the first time today, you need to go back and start all over again at the very beginning, because you're really dropping inside our class at the very tail end. This is a 60-part series, 15-minute videos, kind of introducing you into life insurance. And one of the reasons that we really think this is a good tutorial is because our sponsor, Lincoln Benefit Life, an Allstate subsidiary, has an excellent software package that you need to download. So if you're going to go back and watch some of our prior episodes, we use this in our workshop. So you need to go out to their site, www.lblsales.com/ETW. And when you go out there, you'll see Run Installer. Just click on it and download it, and you'll be able to go page by page with us. We think you'll really enjoy the tutorial experience. And also, Lincoln Benefit and Allstate actually have an excellent couple really great marketing tools out here and first contact pieces for your client for life insurance. And you need to go out to their ULR. It's on the bottom of the screen. It's also attached inside the search engine optimization doc that goes with the video. And as soon as you come out to their site, you'll notice, and there's quite a nice menu here, but I like Facts of Your Life booklet. It's an excellent prospecting tool and great for your existing clients. It comes in book form as well as email attachment. And you can go ahead and use this to collect data and information on your client. You can either give them a copy of that using the attached version or the full book. There's information and harvesting information tactics in there that are excellent, things that I never even thought about before. If you want to get that, just go ahead. It's absolutely free. As it also on this page, it has prospecting letters and postcards. Excellent first contact for client tools and good prospecting and marketing information and for campaigns. And all of these have been approved by Allstate. But heads up, if you're a registered rep and you're with a broker dealer, you're going to need them to approve it. Your compliance department's still going to have to go through that for themselves to go ahead and make it approved. And if you're with an insurance agency that has those kind of compliance protocols already in place, you're going to need to have them do that as well. And lastly, on our website, we carry all our back videos. So if you're saying, Steve, I need to go back and start over, I'm just coming into our class today, just go out to our site, www.brokersalliance.com. And as soon as you come to our site, you'll see the on-demand video button. It's all big and red. You'll be able to hit it, click on it, and you'll be able to see all our EduTrainer videos for life insurance, which are a 60 series, 15 minutes each. And also out there is my weekend show called Welcome to the Weekend with Steve Savant. And of course, our daily internet talk show, The Business Insurance Zone, and you'll really appreciate that. Well, let's get into it today and talk a little bit about some of the basic tutorials that we're going to speak about today in our writers. Now, the first one, and it's a popular one, is Waiver. Now, why I like about Wavier of Premium, of course, remember now, everybody has their own definition, and so you want to make sure when you're talking about Wavier of Premium writer that you're talking about the same thing. Some Wavier of Premium writers only use the cost of insurance. So if you become disabled, they're going to say, we'll pick up the mortality charges and that's it, not the full premium. So just remember, that's nothing wrong with that. Just remember, what are you getting for this? Because remember, most of these Wavier of Premiums are going to have a cost associated with it. And I got to know what that cost is and what I'm getting. Some contracts say no. Whatever your premium commitment is, up to their maximum dollar amount, they'll go ahead and fund that. Again, though, that may have an associated cost with it, so you'll just want to make sure. And sometimes, instead of doing just the premium, you could have, if you're doing this for funding, and this is why it's becoming much more of an item or a rider to look at. If you're funding for income for life insurance and you're using Waiver, one of the things I like about this is that, let's say I'm putting $10,000 away. If I died, my plan would be self-fulfilling to my beneficiaries. If I was disabled, some of these funding income, if I was funding income, I could actually protect my ability to put my retirement together by disability, and a lot of these go out to age 60, some might even go out to age 65 in their benefit. You have to look at it usually between 35 basis points and 50 basis points is going to be this cost for this waiver. Some people say that's a pretty good deal because whether I am disabled or I have a premature death, my retirement's covered. And just a little heads up, some carriers still do unemployment riders that are connected with this. They're not forever. They have a little longer period so that you have to wait till you're completely unemployed for 6 to 8 months, 9 months, somewhere in that vicinity, and they do it for 2 years. So they're going to help you during employment, periods of unemployment. That also has an associated price tag on it most of the time. But remember, that's a pretty good deal. So whether you're unemployed, whether you're disabled, or death, you could actually use a rider like this that would really help you. And again, we have to make sure when we're talking waiver of premium, am I talking cost of insurance? Am I talking the premium only? Or am I talking about, no, they'll let me go as high up as I want. Some contracts, I remember, I think go up to $25,000 to cover it. It's going to have an associated price. But some people say, for the 35 basis point rate of return, I might have to take less. I just guaranteed whether I'm dead or disabled. That's a pretty good deal. So when you're looking at that waiver of premium, that becomes my first thing that I'm looking at in one of these riders. My second one is disability income. Now, I like disability income rider because it actually will give me some kind of income beyond just my life insurance. I might just have a contract that has a term platform on it, so there is no cash. But I could buy, as a substitute or maybe an alternative from planning point of view, I could buy a disability income rider. And that might be great, especially on a term contract or maybe a GUL, Guaranteed Universal Life contract, where the cash isn't really king and you want to be able to have some kind of benefit like this. The disability rider is a pretty cool idea. You want to look at it. It's going to have an associated cost to it. Most of these do. And you want to be able to weigh out, is that pretty good price? When you weigh out disability rider, you can collect a regular income from this if you become disabled and you can't work. The policy specifies the income and whether it's paid to a certain time or length of disability. So you're going to have to look at how much, what's the amount they'll do, how long they'll do it, and what are the definitions of disability. Again, because we're in morbidity products or morbidity riders, I want to know what my definitions are, how much money, and how long will they make the benefit. It's important, and we always want to make sure that we're giving the client the full scoop and options when they're thinking about what do they want to buy. Now, the third one I like, and I really like this one, is a guaranteed option to purchase more death benefit now. Now, let's say I buy a $500,000 and I say, you know I'm on a fast track here. I'm going to be getting some inheritance. I know I'm going to have some bump up in my pay. I'm moving from a regular employee to management, from management to the executive team. All these things. I know I'm going to have future needs and future coverage. I want to be able to, I can't afford it now or I don't need it now, but I want to buy a guaranteed option so that I don't have to be physically fit later on in case my health deteriorates or I have an accident and I am now maybe impaired in some way. I want to be able to get a guaranteed option for my contract, to be able to do it. And it's kind of like this. Let's say you wanted to purchase a home, but you weren't really sure about it, so you told the person who was selling the home, I'll live in your home for 1 year and I'm going to lease it. And I'll give you a little bit more money than I normally would for renting because I'm going to use that as an option to buy. If the market went up, you could say, oh, I'm buying that house because I put a little bit down for an option. I already secured my price that I was going to buy it at. And so at the end of my lease, I go ahead and I would exercise the ability to purchase the home. Or in reverse, I did spend the option money and I didn't want to buy the home because I didn't like the neighborhood or the market value went down. I'm not going to exercise my option. I lose what I paid for in that option price, maybe a couple grand for a home, but I was willing to do that because it gives me the option one way or the other to either buy it or not. Same thing here in guaranteed option. I'm going to have a certain period where I can buy more insurance, and remember they're going to have different levels and amounts, and I want to be able to say, in the future, I'm going to buy this regardless of my health. Now, my age is going to change the premium. I can't buy what I did when I was younger, but I won't have to go through underwriting. I'm not going to have to go through things of that nature. So buying an option sometimes, especially with people that have what I know are going to have inheritance, are upwardly mobile in their actual vocation and are going to take over someday, especially if they have bigger tickets like they're taking over their father or mother's practice. Things of this nature where I know there's some future value that I'm going to need for more insurance and I want to protect the ability to buy the option. This is a great option, and several carriers that used to be a hot idea that the market kind of pulled away, we're kind of getting back into it again. So if you're looking at guaranteed options to purchase life insurance, this could be a really, really good one. And one of the most popular out there, and it is a big popular one for writers, is term writer conversions. Now, as you know, the market has totally changed. We now have anything from YRT, yearly renewable term, or ART, all the way out to 5, 10, 15, 20 year. Actually, we can go all the way out to 40-year term. The term market's the term writer market usually maxes out around 20 years. And what I want to do on this, I want to find out, that's a pretty bad spelling, isn't it? I want to be able to find out how long I need the term writer, and let's just say we're going to use 20 years. When can I convert the term writer? And I want to know, do I have and is it going to be the product I want, the product that I'm buying, is it a good permanent platform to buy it on? Not all permanent contracts are created equal. So how long am I going to keep it? I want to know, when can I convert the term writer? And again, there'll be 5, 10, 15, 20 years on a platform, and I really like it because it gives me the ability to buy more coverage with less money, and then it's kind of a difference between should I buy a guaranteed option writer like I showed you before, or should I buy this and try to figure out when the window of conversion is. Most of these contracts are about half the time, so in this case, it may, instead of 20 years, you have 10 years to think about when you're going to convert this. That's why some people like the guaranteed option. They think it's a better deal. You have to weigh it out and see which contract, which mortality chassis works for you. And remember, there's so many permanent contracts that have this. It could be whole life, it could be current assumption UL, it could be guaranteed UL, it could be indexed UL, and I even think a couple of VUL, variable contracts, have this online. So again, you're looking at a basic idea like this. It's really great. Now, one last one, accelerated death benefit rider. Remember, depending upon the definitions of the accelerated rider, you're going to have to say to yourself, I'll be able to accelerate my death benefit. What are the conditions? What are the conditions of that rider? What are the contractual or policy definitions? Again, we're going back to this whole issue of definitions. I want to look at both of these ideas. If I have the privilege of accelerating the death benefit rider, I want to do it. And remember, some of these contracts automatically embed this. Most carriers now are putting this in the contract absolutely free, and it spells out how much death benefit you're going to be able to get before your death. And if you had to take this, if you became terminally ill and they could show you by your short life expectancy, they will be willing to accelerate your death benefit. So if I had $500,000, they may say, I give up to 30%, 50%, 75% of my death benefit once I know I have early termination or I'm going to be terminal. I'm within a year or less. And every carrier is different about their definition, and every carrier is different on the conditions of that, of your terminal illness, and you'll need to look at that again as your definitions before you purchase so you have no buyer's remorse. So there's a couple of the riders, the main ones. Tomorrow we're going to go over another 5.
This has been an EduTrainment Workshop, the educational division of the National Insurance Clearinghouse. the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.